Within crypto, I think we've got about 4 to 5 billion in assets, again, mainly in the ETF space, but we're starting to dive into tokenization pretty significantly.
What does that look like?
Our goal is to distribute interesting products to investors. And where tokenization really becomes interesting for us is being able to engage the end investor in a way that we've never been able to engage them before.
Like, as the asset issuer on your side, what are these learnings?
Some parts are not cheaper, faster, or more accessible. Phase 2 or 3, whatever you'd want to call it, is, okay, the institutions are here, they're building products. Now, how does the demand side follow?
Yeah, we'll make sure we'll clip that part perfectly. Well, welcome back to the DeFi Drip podcast here at the RWA Summit in Cannes for 2026.
Not a bad place to be.
Not a bad place to be. I have a privileged guest here, John from VanEck, and we're going to just talk around tokenization, and John's going to talk a bit about VanEck, and we're just going to talk about anything we want. So to be very relaxed. So John, welcome.
Thank you.
I don't know if you want to take a few moments just to introduce yourself.
Yep.
Talk about a bit what do you do at VanEck, what VanEck is. Maybe a lot of the listeners won't know. So yeah, you want to kick us off?
Yeah. So I'm a product manager at VanEck, focused on digital assets. We've been in the crypto space for quite a while. So we were the first to file for a Bitcoin ETF in 2017. So kind of an early leader there. We're mainly known as an ETF issuer in the thematic space. So we've got a semiconductors ETF, a nuclear ETF, a space ETF. So I've kind of focused in sort of those different areas. Within crypto, I think we've got about 4 to 5 billion in assets, again, mainly in the ETF space, but we're starting to dive into tokenization pretty significantly. So joined recently back in July. I've been in the tokenization space for 5-ish years now. So hopefully bringing some expertise and knowledge to the team.
Awesome. So when you say VanEck is now diving more into tokenization, what does that look like from exploration, building, launching something? Like where are you guys at now at VanEck around those topics?
Yeah, so we launched a tokenized Treasury fund in April of last year, so about a year ago. That was kind of our first foray, and it was really an experimentation. I think you saw a number of Treasury funds, money market funds out in the market, and kind of finding an early product market fit with, the large on-chain treasuries and foundations and even backing stablecoins and whatnot. So we kind of felt like we needed to be in the market. I think that's what kind of pushed us to go there. Now it's sort of been, okay, take a step back, look at some of the learnings that we've experienced from that process, because not everything goes smoothly the first time, and figure out, okay, for the next product, how should we structure this? Who are we selling it to? What does it look like? And so we're kind of in that phase right now. We've got a few interesting products lined up that we'll hopefully bring to market this year. But it's certainly not a quiet time in tokenization, right? Like all of our peers, the BlackRocks, the Franklins, the Fidelities, the WisdomTrees, everyone's launching products, making announcements, doing all that. So we kind of have to be careful not to fall behind, right?
I mean, everybody, right? Even the ones that you wouldn't expect. And I think it's a quickly evolving space. And I think everybody's dabbling in something.
Yeah.
It's really hard to keep up with the constant announcements of where everybody's going.
Yeah. And I think it's interesting because it's not just the asset managers now. It's also the infrastructure providers. It's the exchanges. You have NASDAQ, NYSE partnering. You have the DTCC now trying to get involved. So it's super interesting because I feel like tokenization was supposed to remove intermediaries. You kind of have the intermediaries still trying to be involved. I think that kind of forces everyone to be a little bit mature, and it forces, from like a regulatory perspective, you need to figure out what you still need in order to tokenize securities and distribute them and all of that. So I think there are certainly positives to that. But we'll see. I don't know if tokenization is going to end up being like the future that everyone had anticipated, years and years ago.
I think we can talk about that. But before we get there, you mentioned, you built the first Treasury bill product. You said there were a lot of learnings that the team went through.
Yeah.
And now as the asset issuer, not we as Centrifuge always sit on the tokenization of the asset side, the asset issuer, but like as the asset issuer on your side, what are these learnings? Like, what do you think if you were to, look back, and what are the biggest challenges you faced and the learnings you had to address?
I mean, I think, the first thing is like from a legal structure perspective, when we launched VBill, it's a BVI private fund, similar to a lot of the funds out there, right? And I think it was the way to do it at the time. Is it the best way to bring like a, money market fund on chain. Maybe not. Like I know some of our peers, WisdomTree has like an actual fund, like a registered, US fund that can do that, support that. So I think that's one piece, is kind of like the legal structure side of it. I think secondly, and it kind of stems out of this, is the actual like utility and use case behind it, right? So Treasuries was an early product market fit. People wanted to diversify their balance sheet away from speculative crypto assets, and they wanted something that generated yield. I think that market is somewhat tapped out in the sense that it's kind of the same couple of players allocating to these products. And so what does phase two look like? And I don't know if our treasury fund is actually set up to take advantage of the next wave of demand that might come from, I don't know, earn products, or, you have people talk about borrowing and lending and looping all the time. So I think there are some inefficiencies there from like an operational setup that might be challenging.
Yeah, I think also like every fund, let's say asset issuer has the issues with the operational side of things,
Yeah.
operational efficiency. I don't think that'll disappear. And like you say, the intermediaries are all involved still. So like you still have this like, it's not all the promised land of cost efficiencies, and you're going to cut out time to market and like the promised land of what everyone spoke about the last few years.
Yeah,
I think it's
cheaper, faster, more accessible, right? It's some parts are not cheaper, faster, or more accessible.
Of course, no. And I think at Centrifuge we know that. I think when we look at it, really, we understand that it's actually just getting asset issuers comfortable with tokenizing their products.
That's exactly it.
And it's not about the cost efficiencies, and it's not about the quicker time to market or faster, cheaper, like the items you mentioned. But it's really about letting them experiment and see the value of tokenizing their product and where the market's going, and be able to tap into this institutional demand that's coming from on-chain allocators.
Sure.
And I think there is a future that we will have this faster, cheaper, better kind of tech stack, but it's going to take a while to get there, because everybody has to experiment first, and then
100%.
obviously implement these kind of like these rails to get us there.
Yeah, and figure out what you don't know, right? There's so many unknowns that I think you will never find out what you don't know without trying first and uncovering those.
And I mean, Centrifuge is a great example of it. It's been in the space since 2017. I think if you were to talk to the early founders, there were so many unknowns that they had to navigate through constantly. And I don't think it would be anybody would ever mention it as a mistake. It was always a learning and something new that they understood, that they had to adapt the protocol, the project to where we are today. So yeah, interesting. So then you mentioned what do we need for the future? Where you're looking forward? What is that like? What do you think needs to happen, or what do you think that needs to happen in the next 6, 12, 18 months in the space to really empower VanEck to really be successful in the market, in the tokenization space, or just in general RWA ecosystem? What do you think needs to take place?
No, I think like the regulatory piece is important, right? Because as a registered investment advisor and having certain licenses and all of that, like that on top of we've been around for 70 years and we built up a pretty good reputation around issuing different securities. And yeah, you don't want to throw all of that away. And I think right now it's kind of difficult because we're operating in a little bit of a no man's land from an issuance perspective. So, how can you actually bring your securities on chain and distribute them? And then the second part that not enough people talk about is the marketing piece as well, right? Like, okay, we bring a security on chain and we distribute it through a centralized exchange or a DEX or whatever it is. What are the implications as to how we can actually talk about that and sell that product? Because I think as an asset manager, it's all about distribution for us, right?
And it's really hard because it's unknown.
And it's unknown.
It's unknown. You don't actually know what you can do or what you can say, or how do you distribute. Who you can communicate with, and the structures of this. And I think it goes down the entire stack as well. So we work with, I mean, sorry to interrupt you there. Like we work with a lot of like the DeFi protocols, and there's always the question about like, what can you say? What can't you say?
100%.
How do you sort of grow this? And I think distribution in that arm is really difficult.
Yeah. I think the regulatory piece, I think the second thing maybe that I'd mention that kind of could spark some additional institutional participation is a standardization. So we see this a lot in tokenization generally. You have kind of like the private fund model, you have sort of like the derivative wrapper model, you have a custodial model like Denari has. So there's a lot of these different versions, and all of them look very different. legally and operationally, and what you can do with it and who you can sell it to. At the end of the day, I think our goal is to distribute interesting products to investors. And where tokenization really becomes interesting for us is being able to engage the end investor in a way that we've never been able to engage them before. So if you think about it right now, we have investors that hold our semiconductors ETF through a Schwab or a Fidelity. We have no idea who those people are. We kind of just see this omnibus account at Schwab that holds all of these assets. In a token format, we see a world where we can actually directly engage them, whether it's something as silly as sending merch, or whether it's giving them access to sit down for dinner, with our CEO, or maybe, and pending securities issues, airdrop them certain things, or just different levels of engagement. And I think that's super interesting for asset managers in general.
Super interesting. I'll have to make sure I buy some
There you
of
go.
the
A
fun,
hat
just
could
to
be
make
coming
sure,
your
just in
way.
case I get a little hat or something from VanEck.
I'll give you a hat
Only
without.
personally delivered, right?
I'll give you a hat without the token.
So, I mean, we're at our RWA Summit.
Mm-hmm.
It's great to have you here. Maybe just as we close this off, anything that you've enjoyed about the day, anything you've learned, or something you want to share about the insights of RWA Summit?
Yeah, listen, I think this is a fantastic event. What sticks out to me the most about this event and others that have been taking place as well is the vibe in the room has kind of shifted crypto from crypto native builders and users standing on stage and sort of pitching the TradFi, leaders on what they should be doing and why, to now TradFi leaders that had, strategy or product or trading or research, now pitching an audience of more sort of like institutional
100%.
TradFi people explaining, hey, this is what we're doing and why, and this is why it's important. So I think there's a little bit of a mentality shift, and that shift, of a vibe this year that, I haven't seen in years past, where you really see senior people on stage that also know what they're talking about, which has been fantastic. So.
I mean, I'll just share, like, when I attended my first RWA Summit, it was about how are we going to get these big names coming on chain to tokenize products to take us from the 100 million we had at the time to $1 billion. And today at the RWA Summit, we have guests like Apollo and S&P 500 and Group. And there's all these enormous players that are now coming and saying, hey, we're actually here, we're on chain. We have products, we're launching things. And it's such an amazing, let's say, growth over the last 2 years alone to see these, where we were saying, oh, we really want these people to be here. And now they're here and they're on chain.
Yeah, now they're here, they're on chain, they're building products, they're distributing those products. I think phase 2 or 3, whatever you'd want to call it, is, okay, the institutions are here, they're building products. Now, how does the demand side follow? Because right now we have a lot of different products out there. How do we actually find that new product market fit for those products that are now increasingly coming on chain?
100%, completely agree.
So
wrap it off. Do you have any questions for me?
No, I love your shirt, and this was fun. So
John, thank you for taking the time.
Awesome.
Really appreciate having you here.
Always good chatting.
Hope to chat soon, maybe at the future DeFi Drip in New York.
There you go.